What if I told you that some of the biggest banks in the world are facing a critical strategic dilemma? Should they continue investing billions of dollars building their own banking technology platforms? Or should they become part of a larger ecosystem where banking services are delivered through APIs and digital platforms? This debate is shaping the future of banking, fintech, AI transformation, and even the future of customer experience in financial services. In today's video, we're going to deeply explore what build and control means and what banking as a service or BaaS actually is. We'll discuss why banks invest billions in transformation, why fintechs are disrupting them, and how AI is accelerating this shift. Whether you work in banking, fintech, or IT, this is one of the most important strategic shifts happening today. Let's begin. To understand this transformation, we first need to understand how traditional banks were built. Historically, large banks operated using a build and control strategy. It means banks preferred to build their own systems and infrastructure. They wanted to control customer relationships, data, security, compliance, and operational risk. Why? Because banking is highly regulated. Banks are responsible for protecting customer money, managing risk, and maintaining financial stability. For decades, they invested heavily in core banking systems, payment platforms, risk engines, and internal data centers. Some banks still run systems built decades ago using mainframes. Surprisingly, many of those systems still process billions daily. Their philosophy was simple. If banking is our business, then banking technology must remain under our control. But then something changed. Digital transformation accelerated. Customer expectations changed. Mobile banking exploded. Now AI is transforming everything again. Suddenly, traditional build and control models started struggling because they are extremely expensive. Second, innovation is slower. Large banks move carefully to manage systemic risks. A fintech may release features in weeks. Banks take years. Third, legacy systems create technical debt. Many were never designed for real-time APIs, cloud-native architecture, or AI integration. So banks began asking, do we really need to build everything ourselves? And that led to the rise of banking as a service. Banking as a service, or BaaS, fundamentally changes the model. Instead of building everything, banks expose services through APIs. Think about it. In BaaS, banking capabilities become modular services like payment APIs, card issuance, and identity verification. A customer may use a fintech app, but behind the scenes, the regulated infrastructure may actually belong to a traditional bank. This completely changes the role of the bank. It becomes a regulated financial platform provider, enabling entirely new business models. First, speed. Fintechs can consume APIs and launch products rapidly. Second, lower cost by reducing the development burden. Third, innovation ecosystems. Banks can partner with fintechs instead of competing. Fourth, embedded finance, where services are in e-commerce apps. But BaaS also creates risks. One is loss of customer ownership. If the fintech owns the experience, the bank becomes invisible. There's also margin compression and regulatory risk. If a major BaaS platform fails, many financial services may fail simultaneously. Now, AI is accelerating this. Banks are becoming AI-augmented financial platforms, where AI is the decision engine and interface. No bank can innovate in AI alone. The ecosystem evolves too fast. The future is banks, plus fintechs, plus AI platforms together. The future bank will look like this: a highly controlled financial core, surrounded by open digital ecosystems. The winners will balance control, innovation, AI integration, ecosystem partnerships, and resilience. This transformation is only beginning. If you enjoyed this deep dive, please like and subscribe. Let me know. Should banks build their own tech or use BaaS?